institutional investors, that includes pension funds, in the capital market development and economic growth. The focus will be like on liquidity and national savings, how that affects liquidity and savings in the country, and what role institutional investors can play in that. Also a role in capital market development, financial innovation and development, economic growth and returns, and the impact on financial efficiency and transparency. As I had introduced Nicola before, she's a Chief Risk Officer at the Johannesburg Stock Exchange, and she's also the chairman of the Johannesburg Stock Exchange Pension Fund. If we manage to get Evans from FSD, they will just have a few insights also from the Kenyan perspective. But Nicola can just handle this on our own as we try to navigate through this schedule. So Nicola will be taking the next 30 minutes or so. Then we will go to Rory in Johannesburg, who will do a case study on impact investing. So let's try to keep it. Nicola, I think she can rush through and do a 25 minutes. Then we take a Q&A. Then from there, Rory will be on standby. Thank you.
Thanks so much, Stephen. Can you hear me? Should I hold it?
Yes.
Okay. I don't have a presentation. This was supposed to be a fireside chat, so I'll have a conversation with the audience instead. I think just to quickly go back to my background and the different roles that I've performed, I think it's important to consider that before I go into the conversation, because I think I've got a combination of different perspectives to share. So as Stephen mentioned, I'm currently the Chief Risk Officer of the Johannesburg Stock Exchange, and I chair the JSE Pension Fund. But my background is really in markets. I headed up equities and equity derivatives at the JSE for many years. And then in the last couple of years, I've headed up group strategy as well as sustainability. And so my role has very much more been in terms of, on the asset side, looking at market development, looking at bringing new products to market. And my key clients have been pension funds, like yourselves that are in the audience. So I think that's important as a perspective. In my role at the exchange, I also represent the JSE at various forums like the World Federation of Exchanges. I sit on their risk working group, and I sit on the South African Reserve Bank's Financial Sector Contingency Forum, which means that we engage on different topics. So as an example, one of you asked me earlier, how's Eskom doing? So we've got a disaster recovery plan that we're working on in the case of a disaster where there is a real risk in South Africa of a potential grid failure. So that's one of the projects I'm involved in from the South African Reserve Bank perspective, and I engage there with my industry peers. I'm also the chairman of the CFA Society Governance Risk and Audit Committee. So in that regard, as I've mentioned, I deal a lot with the asset management community. I myself am also a CFA charter holder. So the investment industry is really at the heart of my background and my passion. And because I'm now in the Risk Society, I've also joined the Institute of Risk Management of South Africa's Risk Intelligence Committee. And so we are actually busy doing our South Africa Top Risks Report for 2021 at the moment. And some of the top risks you can imagine are things like climate change, things like the absence of ethical leadership. You guys would have seen in the news, we've had some massive corporate governance failures on both, well, governance failures on both the corporate and the public sector side in South Africa. So those are some big risks that we're navigating at the moment. And then one of the big ones that we discussed yesterday already is the very deep-seated structural inequality gap. South Africa is a country with one of the highest Gini coefficient. So I think I did mention yesterday, so very important for us to make sure that we bring social projects, and we've been mentioned a lot of that, where pension funds have the opportunity to invest in impact projects that really uplifts and is for the benefit of the broader society. So I think that's just important to mention, and you would have seen Maurice in the previous conversation. Maurice, as he mentioned, has an ETF listed on the JSE. As I mentioned, I used to head up equities, so have really worked closely with him and others to bring these types of products to market. Exchange traded funds is a great way to build markets, and he's certainly been able to bring the continent on the JSE through his Africa ETF. So in that vein, I also co-head the Women on ETF South Africa chapter. So we spoke a bit about female empowerment as well. That's close to my heart as well. But I think just taking a step back and talking to this specific topic. So the question is being asked as to whether pension funds have a critical role to play in the development of capital markets and potentially the economic development in your respective countries. So I actually want to throw the question back at yourselves and ask you, do you think that pension funds have an important role to play? So can I pick on some of the audience members? I'm happy to come to you. I want a view from different countries. Can we have a view from which country first?
My name is Kosgei Kolil from Kenya. I think the pension industry has a role to play because it has patient capital. So since we have that patient capital which we can invest, then it means we have a role to play even in the capital market development.
Great, thank you. Kenyan view and is that a Zimbabwean view?
Thank you, Nicole. I think given the longevity or nature of pension funds, where investment is long-term, they have a strong base for development of capital markets. Thank you.
Thank you. Maybe one more view from another country. Zambia.
Yes, they do have a role to play, not only in terms of return, as we learned yesterday, but also through creation of generational wealth.
Yeah.
Because you start with the household and you look at what preparation you are doing for this next generation in terms of economic empowerment, in terms of the creation of wealth. So yeah, the pension houses have a very big role to play.
That's a great point. I think we spoke about that yesterday as we walked out, and I think intergenerational wealth is such an important topic and such an important concept that I don't think we've got right on the African continent. I mean, it's something that our European peers or counterparts and in the US have really got right, and that's saying the family have started to build assets. And so you don't have to start from scratch. You don't live on debt every year. So at least one of your generations has to start building that baseline, and then it sets your next generations up for success. So I'm definitely not going to argue with any of you. I definitely agree with that. But I think to take a step back, and maybe I can give you some practical examples of what's happened in South Africa and specifically at the JSE. So we have been around for over 130 years. Our market capitalization is just under $1 trillion. So that means that we are the 20th largest exchange in the world. But if you look at the GDP of South Africa, we rank as number 35. So it means the capital markets have actually outgrown the GDP of the country. And the reason why we've been able to do that is because of the institutional investors like pension funds, like yourselves. And the reason for that is because we don't just list local instruments. We've ended up providing a whole host of other instruments. About half of the capitalization of the companies listed on the JSE give exposures for our investors to offshore assets. So the companies that we've got listed are inward listed securities that give exposure all over the world, but in rands. And so I think it's really critical that your capital markets give you an opportunity, not just for investments within your country, but give them opportunity outside of the country as well. And the other point is we're a multi-asset class exchange. So we have listed shares, but we also have bonds, and we've got a whole host of derivatives markets. We've got equity derivatives markets, interest rate derivatives markets, currency derivatives markets, commodity derivatives markets, And so you can hear a whole variety. And we've also got what we call bespoke derivatives, which are specifically created for pension funds. So as an example, if you have a fund that has exposure to a certain number of shares or whatever the case might be, and you're worried about how the market is going to perform in the next year, you list that bespoke product and you can short that thing, and you use that and then as a hedge in your fund. So my key message isn't to try and understand the technicalities of these products. My key message is work closely with your capital markets, work closely with your asset management industry, work closely with your stock exchanges to design the products you want to see, to design the asset classes you want to see listed. And for me, that will then actually result in economic development. We as the JSE did not achieve all of these things on our own. We've achieved this because we've collaborated with our local buy-side community, including our asset management community, and very importantly, our pension funds. And if we talk across asset classes, that's why when I mentioned earlier today, I think, that we're also looking at a private equities platform. Because the reality is, as an exchange, our core essence, the reason why we exist, is to bring investors together with corporates, investment opportunities. And so the investment opportunities can't just be shares, it can't just be bonds. If it's private equity instruments, then it's private equity. If it's hedge funds, then it's hedge funds. You'll see internationally, other exchanges have also started listing active managed funds and hedge funds. So it's about making sure you've got the exposure to the asset classes that your buy side wants. I think just talking about the size of the asset base in South Africa, which is also very impressive, is because we've got a structured and through policy and reform have created a retirement industry that has assets now twice the size of our bank assets. So, I mean, that's an important stat to reflect on, because most of us have started off with the banks or the biggest entities, have the most capital, have the most assets. Because of our flourishing pension fund industry, which is about half of the size of that asset, we've now actually got a whole institutional investor base, which has twice the size of our bank assets. And that is how we build intergenerational wealth, to your point, is you bringing everyone into the system. It's not just the banks that end up having the big capital. It's each one of your individuals that contribute to a pension fund or some other type of retirement structure. And then I think the only other thing I wanted to reflect on when we talk about asset classes, I've mentioned to you, if you engage and you partner with your capital market providers, your exchanges, you partner with asset managers to make sure you build your assets and you build your instruments in your marketplace. It's very important for me, because if you look at our instruments, Maurice spoke earlier about ETFs, you know, we've got shares listed, we've got bonds, property. That's a good success story for me. We worked very closely with the real estate investment trust industry. We lobbied government. We made sure that there's a tax benefit for these instruments. We listed these instruments. We created transparency. We created structure. And that, in essence, then attracted more investment flow to South Africa through these structures, because it's known entities to offshore investors. So creating the structure in a way that you've got more offshore investors participating in the market as well. I spoke a little bit earlier already about the structured derivatives instruments. We call them can-do instruments. We're the first exchange in the world that listed that, and we can't take the credit. It's one of our pension funds that designed that product. But they came to us with a specific need, and we designed that solution for them. So we've created a marketplace that has multi-asset class, multi-structures that can benefit our clients. And I've spoken about the private equity platform. So let me talk about two bad stories where we didn't do the right thing. If you look at our OTC derivatives market in South Africa, the interest rate derivatives market is one of the biggest derivatives markets on the continent. But our interest rate derivatives that are listed on the exchange are maybe 1 or 2% of the total assets. And 80% of the total assets of interest rate derivatives products are being cleared in London through the London London Clearing House. And so for me, the challenge is, and for me, it's a warning that I'd like to give you. If you guys don't actively participate and work with your capital markets providers, you can lose your flow, because your markets will get big. You will get more assets. You will have different asset classes, but there are other marketplaces like London, the US, that are looking for liquidity and they're looking for profits and they want to come and get it here. So that's a warning sign for me. 80% of our interest rate derivative products in South Africa is cleared through London. It's a big missed opportunity. We are now setting up an independent clearinghouse to offer that. So we'll potentially be able to have 20% of the market share of local instruments. I think that's such a challenge. The other point is the South African bond market. 50% of our bonds are traded in London. Again, a big missed opportunity. The way we've responded to that now is we've set up a listed traded bonds market. And so we've partnered with National Treasury and the banks to create a listed and traded bonds market. So I think, again, just the key message is make sure that you understand where your market is going, what are the asset classes you're interested in, and what are the opportunities. We've spoken a lot about private equity. We spoke about infrastructure as an asset class. So making sure that you develop those markets in your country, because all of that essentially is building your real economy, and then you want to keep your asset flows linked to those instruments in your country as well. So your listed instruments. So I think that's it from my side. I don't know if we want to open the conversation up and hear what others have to say.
Okay, do we have comments? Capital market comments? How are we doing at the Nairobi Stock Exchange? Or is it the Securities Exchange? Comments? Question?
You've asked a very fundamental question. So how is Nairobi Securities Exchange doing? There are a lot of reforms which are going on currently. Last year, I think we introduced derivative market. It's not peaking yet. It's not peaking because people are yet to appreciate that. Even as pension schemes, we are very conscious in investing in them. We have not yet embraced. Equally, on infrastructure bonds, just the way Sandeep, my colleague Sandeep had explained, there are still some reservations. And the reservations are bordering the fact that most of the projects are funded by the Chinese. So we are fearing, there is that fear from the pension schemes that since the bulk of the funds are backed by the Chinese, what will happen in future? Because those contracts are a bit secretive. If there are contracts which are brought on the floor, then I think it would have been an easy entry towards also starting now to influence, to start investing in those infrastructure bonds. I know we have a PE, an American PE, which has been set up, and they are focusing more on infrastructure. Most of the pension schemes, there is association of, we have an association of pension schemes in Kenya, apart from the consortium, which is an investment vehicle. So generally at that level of Nairobi Stock Exchange, there are governance issues which are being sorted out, and we're hoping that we shall pick up in terms of whether the pension schemes will be able to play a critical role in mobilization and ensuring that the pension capital is invested. That is another key area. We are still restricted by the capping of the investment. The prescriptive rates that we are required to invest is still limiting the pension schemes. And there has been a lot of also interference from the Treasury, where they want to be able to say, this is where you're going to invest. This is how you're going to invest. So once we are through with the governance issues, I think it will be very easy to now say what role can we play effectively, including impact investing. Thank you.
Yeah, and I think there's an opportunity to leapfrog other exchanges. Other exchanges are now looking globally at how can they bring impact investing boards. I mentioned earlier, we've got a sustainability board. but you can actually create those marketplaces now in advance before the Western world has even done that.
Okay, do we have another comment? Okay.
Thank you. Nicole, this is George again. Mine is just to pick your mind on something that at times when you try and match where they say that the source of growth is in terms of its contribution to GDP, for example, look at that, and then you also look at how that there's a disconnect between that, what is contributing to the growth, GDP in a country, and the available counters for direct investment. At times we lose the connection there in a way, because in our market here, you find that when you have the money and you're approaching those counters, you are attracted towards like the financial services counters, the banks and all those in our stock market. But on the other hand, you're told agriculture, for example, is the main contributor towards GDP. And so that disconnect, what's your comment around that?
I think that's a very important point, and for me that's an opportunity, and why I've tried to emphasize at the start that you need a partnership with the pension fund industry, the asset management industry, and the capital markets, because the reality is capital markets on the continent, I'd probably say, and potentially globally as well, are not reflective of the actual real economy in those countries necessarily. And the biggest reason for that is because the exchanges exist because companies come and they say they want to list on the exchange. The exchange doesn't actually look at the economy and say, okay, I need 20% to represent my tourism industry, I need 30% to represent my agricultural industry. Let me target those industries and get listings from those sectors. And that's very unfortunate, because that would be ideal for investors. And that's why I'm saying, if you as pension funds and investors can go to the capital markets and say, guys, this is what we need. These are the sectors that are underrepresented. Proactively go and target those sectors, or bring me other structures. Bring me exchange traded notes that give me an exposure to the agricultural sector, or bring me an exchange traded fund that gives me exposure to that, or a private equity platform that gives me exposure, but create structure for me through technology, through known instruments, through known financial securities that I can trade on a public marketplace. And I think a good example of that is when we ourselves listed green bonds, because we had clients coming to us and say, we need more exposure to bonds. We have ESG requirements from investors. How do we get access to these? And we proactively created the segments and worked with the asset management community to bring those products to market. And I think that's critical, because there's a lost opportunity. If I look at across the continent, there are some wonderful fixed income products. And I'm just worried that those aren't listed and traded in your capital markets. But many of those are potentially listed and traded in London. And so again, for me, that's just the risk of the capital flow actually moving away from the continent and being traded in Europe, essentially.
Okay.
Thank you very much. My name is Ratizai. Mine is just a comment on what is happening, what is currently happening in Zimbabwe. The pension portfolio on the Zimbabwe Stock Exchange is actually performing well, as most investors are running away from fixed income and money market instruments to guard against inflation. Thank you.
Will you comment on that?
Yeah, thank you. I mean, that's a very important point. I think probably the only comment that I'll add there is I think our markets have to be diverse. It needs to represent all the different industries and sectors. Traditionally, the South African asset management community have invested predominantly in shares, listed equity. And I think they haven't been risk aware enough in terms of being aware that there should be other alternative asset classes that they should be looking at, like infrastructure that we've spoken about. Yeah, I think the key thing is just to make sure that your capital markets are designed in a way that it gives you exposure to all the different asset classes and instruments that you need. Because this year bonds might not be doing great, but next year they would potentially. So diversification is key.
Okay, any other comment? Okay, so then we will close this session. Do you have one? Okay.
Okay, I just wanted to add more on the capital market development that in Zimbabwe, what we have also done, Matthew from Zimbabwe. So it's not only that we pursued as well the institutional investor, but also retail investor to capture the lower tier of the exchange, stock exchange, which we call FinSec stock exchange, which targets normally the micro and small and medium enterprise, so that they can also participate in the innovation or growth of the capital market. So individual, actually, as I speak, they can also participate in purchase of stock and shares through the C-Trade by just using your mobile phone to buy shares on this lower tier exchange. And with that, which has been mentioned before by panelists from South Africa, that we then introduced the Victoria Falls also to de-risk the sovereign risk which we have in general. But we are foreseeing that that one, it may take us to another level as we speak. That's why my colleague was calling for open for business, as he first mentioned. So what I'm saying is we have various measures which are trying to capture even the informal sector to participate, not merely the institutional investor only. So that let those even in the formal sector start to learn how to invest also, just using your phone. Thank you.
Yeah, that's a great innovation that you're mentioning. And I think South Africa is not a good example of having attracted a high percentage of retail flow. But if you look at the Chinese marketplace, I mean, it's just phenomenal the amount of retail activity that's happening there. And as you saw, one of the speakers showed they have over 1,500 listed instruments. And to me, that talks to the risk appetite of the retail investors. They're willing to invest in a small company. They're putting their capital at risk for a small company because they believe in that company's future. And we've seen that with our Altex board, which is our entry for SMMEs. And if they list there, we've got a lot of retail interest, which is really great. But for me, I would just throw it back into the pension funds court here and say, the biggest reason why our Altex companies haven't done so well is because our pension funds are too conservative and they only invest in the top 40, maybe top 80 shares. So they don't invest through the board to the smaller listed companies. And you end up having not enough institutional capital to support those listings, and then you end up seeing delistings. So for me, the risk appetite of the pension funds are really important to challenge that, to say you've got to take more risks so that you can support your local companies so that you can develop the economy.
Okay, I think that was the last comment. And with that, we say thank you to Nicola. Let's just give her a round of applause. Thank you very much. Thank you. Okay, we will move to the next session. Just a second.